Hi everyone. Alright, so today we'll do a stock analysis in Yancoal Australia LTD, ticker YAL.AX, and it's an Australian coal mining company. Quick disclaimer, I'm not a financial advisor, this is my own research, up to you to make your own decision. So same process as usual, we'll start with the company profile, then go with the fundamental analysis, and figure out as well who the owners are and insider ownership, and then we go to technical analysis, then we do price catalyst, so in this case it would be coal, and then we finish with a conclusion. So let's start with the company profile. So Yancoal is actually a coal mining company, as we said earlier, and it's actually operates 8 producing coal mines, and they're all in New South Wales, Queensland, and Western Australia. We're gonna get a bit more detail in the next few slides. Then they have like 6,000 employees across like the country. They pretty much, yeah, like what I said earlier, exploration, development, production, and marketing, metallurgical and thermal coal, and they have like clients all over Asia. We'll get to it later as well. And so it's been incorporated in 2004 and based in Sydney, and the company actually is owned by another company that is called Yankuang Energy Group Company Limited. So I'll get to explain a bit in the next slide. So to get a bit more information about who owns actually Yancoal company, I went through pretty much defined 2 more companies that are like it seems like layers and layers of companies, but basically to make it simpler, Yankuang Energy is a Chinese company, and basically they do coal mining in general, and like and they do as well potash mining, chemical production, power generation, logistic, and it's majority owned by Shandong Energy Group, and that company is actually a state-owned coal mining with a headquarter in China. So it's pretty much, in other words, Chinese government company that own Yancoal by a large margin. Actually, I will show you guys in the next slide. So let's talk about insiders and shareholders now, and I wanted to show you guys the directors in here. So there's a major, like the CEO David has 5 million shares, which is like pretty much a good number. I like that. And there is another director that has 400,000 share. So outside of those 2, the other 2 are very like a small amount, to be honest, and it's represent only 0.004% for the CEO. So it's not that much, to be honest, not too much incentives, but still like a large number, still probably around 25 million at current price, so it's still not a small number. And then in terms of the shareholders, something to notice is what we talked earlier, the Yankuang and Shandong Energy, they are like representing 62% of the whole company. So I think they are the same, and they just show it there. And after that, the next one seems to be, I don't really know what they are, but maybe they divided into different allocation, not sure, but that doesn't really matter. What's the most important is that this company owned by the Chinese state basically owns it, so have to know that at least. So in these slides, I want to show you guys all the company assets, specifically all the mines they own and where. So they own it in Queensland here, then New South Wales and Western Australia. So I had it as well on the right, the ownership, so what they own in each of those mines. And to give you an idea, most of them are controlled the majority by them, and a few have 50% ownership. The ones that don't have any numbers on the side is because they are not owned by them but just managed. So you could even say that their assets are actually just in Queensland and in New South Wales, because like Premier mine is actually in Western Australia and it's not owned by them. Then another thing that was interesting is how the percentage of production that they sell with those mines. So 3 of those mines, the first 3 here represent 80 to 85% of the whole coal mine. So Moore, Laban, MTW, and HVO. So HVO, Mutlaban here, and then MTW, yeah. So all these 3 own, like, basically produce the majority of the coal. And so something as well to bear in mind is they are producing 36.9 million ton. That's what they sold for 2024. So I would like to apologize first on how it looks, because it's very tiny, and this comes from their annual report, and I thought the data was interesting, but I didn't want to put 10 slides, so I wanted to put them together. So these 2 in there is just the data I took from the previous slide, the number, holdings, percentage, so you get an idea. And some are joint venture and some are more like control, like and then the next step, this is more important, is what I wanted to talk about, is their reserve. So I found in there, so first time I do this, so apologize if I make mistake, but this is what I found is around 650 million ton. And so I only got the proven reserve, not the probable, because we don't know. So at least something they potentially could mine easily. And then because they don't own fully those mines, I took a ratio from what I've seen the number on the right. So I took 2/3, and just to give you an idea, 2/3 of 650 million ton at 100 USD. So this is the current price for coal per ton. So this is quite conservative price, I think. There's a lot of chance that it might even go higher. I could go lower, but I think it's near bottom in my opinion. So I'm trying to say as conservative as possible, in other words. So this represents 43 billion USD and 67 billion AUD. And when you think about it, like, they're only selling around 36 million ton. So that would be something like 10 to 20 years worth of coal to produce for the next 10 to 20 years, basically. And I would say it's not, actually, it looks like undervalued just looking at that. I mean, the number, it's kind of enormous. I know when they sell all that, they have nothing left, but still, considering the company is worth only 5 billion, they kind of secure the next 5 billion per year for 10 years. Obviously, I'm not removing the cost and everything, but it sounds really undervalued in that sense. This is my opinion. When you put a number like this, it feels like, compared to other companies or other stuff, like, I feel like it looks pretty undervalued. So this table comes from the annual report 2024, and what I've seen in that was that New South Wales sales are actually much higher than Queensland at 500. So New South Wales is actually the area where the company sell the most coal, pretty much, and it represents something like 90% of the whole production. So we could almost even say that most of the revenue come from New South Wales mainly, and not even Queensland that much, and nothing in Western Australia. So again, a lot of documentation from the annual report, but I just want to show you where I took the information in the annual report. So this is an important thing as well, is the cost of production in Australian dollar. So in this case, it's 93 Australian dollar in for the cash operating cost. And then they have the another one which is around 113, around there, and there's another there, I think similar price. So just to show you that their cost is between, let's say, 90 to 110 to 120 Australian dollar, and then the lower price that we've seen in the past 2-3 years been 100 USD, which is $155. So they are profitable. I wouldn't say it's amazing at this current price. They probably have a return of potentially 20-25%, but they still basically making money. And I would say if the price of coal rise and go back to $400, obviously they will make tons of money. So it gives you an idea of how much it costs for them to produce. So this slide shows the clients. So it's pretty much in this case China, Japan, Taiwan, and South Korea represent pretty much the whole amount, and then, but they have clients pretty much everywhere in Asia, and I think even a bit in Europe as well. Yeah, but a little bit, 1%, and only 1% is actually for Australia. So that's quite interesting, because even though it's in Australia, Australian stocks, it doesn't actually go to Australia. Yeah, I find that quite funny, because like 1% is very little. And yeah, the major one is China. Actually, it's the first time in coal company that I see the clients is China first, and I guess that's because they own the company, maybe. But yeah, this is quite interesting, because all the others that I've looked at in the past, they have pretty much nothing in China. Nothing is sold, and so that's interesting, because every time people say that Australia is dependent on China, but actually it just depends, because like a lot of companies not even deal with China directly, especially in the coal industry. Just this one. So far, I haven't seen all of the coal companies yet, but I have a good idea now. So on this one, simple, just showing information that Yancoal is quite an important company in terms of coal producer. So the only one before that is Glencore and BHP. So it's quite a very large producer. So let's look at the basic fundamental with YAL Finance first. So the market cap is 6.7 billion. The P is around 5. Forward is 6. I mean, like, price to book 0.75, and like everything, enterprise value is 1.8. All of these numbers to me are telling that screaming undervalued. Then the returns are fairly good overall. The income statements is still making money. I mean, as I said earlier, they are profitable even at the low price. Then the debt is pretty much inexistent. They have nearly 2.5 billion cash on top of that. So I mean, like, that's half the company, really, 40% in cash. And then they're generating something like between 1.2 between the leverage and operating cash, so 2 billion, let's say. That's quite insane at those prices, especially coal prices. And other than that, just checking in there, so in here, held by insider 75. So this is interesting, because I don't know if I could say that, but it's owned by another company, parent company. Yes. Interesting. And yeah, the dividend is pretty high. I think 20% seems a little bit high. They might not give that all the time, to be honest, but yeah, at 35% payout ratio, that's still crazy. Let's say, I would say 10% to be safe per year, 10 to 15 as I've seen. So now let's have a look at the fundamental with the graphs to give you an idea. So equity is massive compared to liabilities, very good to see. The like overall total assets, they are not really rising, pretty much stable, but the equity has been rising quite a lot and the debt has been going down. And you can see it in here again. It's pretty much the same idea, that the equity has been going up, yeah, in here, and then the debt in blue has been going down. So same idea. And then after we have the current assets, nothing to complain about, they seems very stable. So like this is the revenues now, so they've been a bit declining, but this is because of the coal price has been going down. So I'm not actually sure if 2025 might be a little bit less good than 2024, potentially. To be honest, might look like a bit more like 2021. So something to consider, that they might not be as good, which might be why they are looking very undervalued at the moment. So this is the risk, that it doesn't actually increase and go down again in 2025. That would depend on the coal price anyway. So we'll get through it in the technical analysis next. And then we have the free cash flow that has been doing fairly well, obviously getting closer now to zero as we get lower coal price, and then the expenditure is reasonably increasing, but nothing major. Then we don't actually have any share issued, so unlike white coal and the other ones like Whitehaven Coal and NHC, I forgot the name again, but they're both repurchasing shares, which I like. In this case they don't. And then like the earning per share, same as the free cash flow, is going down with the price of coal going down. So let's look at technical analysis now. So the company is pretty much going down for the past 10 years. From 2013 to 2020. And then it's been it broke structure in 2022, and then now pretty much just consolidating. And I would say that price at around $7, so around there, is I believe when this breaks again on the upside, there is a really high chance it goes much higher. Like at the moment it's still consolidating, so we don't really know. So now let's look at the daily to get a bit more precise. So all that we've seen now is that it, like since 2022 it broke, then it like kind of kept consolidating here, and then I think it took here a little liquidity there or not, but sorry, this is for my short term, but doesn't really matter. But it's just seeing that like right now there is no sign that it's gonna break on the ups or down in the long term, but right now it looks a bit more bearish than bullish. So I'd love to see it get back to 6, but in my opinion at those price around 5 as a fundamental investor, I think they are like, it's quite good around these price. In my opinion it's undervalued, because in 2021 and 2 they had more debt, way more debt. Now they don't, and like I would say they are way safer at this price than they were in 2021 and 2, where they had way more problems. So now let's look at the price catalyst. In our case we're going to look at coal futures. It makes perfect sense in this case for coal mines. So we've seen a massive break in 2021, 2022, pretty much like the coal stock as well, price same thing, and it shot up to 400, and then since then from 2023 it's been going down, and it kind of broke structure again. So like came back down, and then now we may have a support around this area in yellow. It looks good. It might be a little break on the upside. Let's look at short term, but yeah, it looks bearish at the moment over the longer monthly period. So this is the coal price on the daily. So this is very, very new and could always change back again, but we have a little break here, so it shows that a price might get higher. It seems like a nice push, so hopefully it does something like this, and come back there. But there is a lot of resistance there that, like, to get there would take some time. But yeah, let's hope this continues. It's probably the first time I see something a little like positive in the past 2 years. Before that, it was always like the structure was always like on the downside in a way, but this looked nice. So let's continue to monitor. If it follows what the price I'm showing, then we are on the right track. So to conclude, what I want to say is that the company is fairly stable. It is quite undervalued in my opinion. Even it's profitable at a low coal price, unless it goes to like 60 or 70, but still overall looking like they should be fine. The stock price is consolidating. It's a little bearish, not that great, but you know, at this price seems fairly good, around 5. Great core reserve with what we've seen, and then the risk is mainly the China influence, to be honest, because of 60% control. It doesn't have to be just China. It's nothing to do with the country. It's just 60% control. When you see that, there's a bit more risk. But we've seen that there are a lot of companies that are controlled by countries in the past, and it doesn't make them terrible, but you have to watch out. And so the coal price, there's just a little hope, but we could go back on the downside, but at the moment there's a little hope that it could continue on the upside. So that's a bit more positive than before when I was looking at coal companies. And then the last bit is the pretty much 4 countries that are actually clients mainly. A little bit not diversified, the distribution, but let's say it's fine. So that's it for today. I hope you enjoyed the video, and see you in the next video.